Yo, what's good, y'all? So I'm gonna be doing a trade recap of the trades I took on July 12th, which was yesterday on oil. Again, I traded every asset, all the four assets, I believe, on yesterday. I will try to see if I can go over those as well, um, depending on how long this video is. But yeah, let's just go over some of these trades. Again, since I've teach you guys price action strategy, it works on any asset, so just keep in mind that what I'm showing you guys here based on structure and everything, it works all the same on any other asset, okay? The only difference is the behavior of the asset moves slightly different. I've been trading all these for quite some time, so I know how each asset moves slightly differently. For example, oil tends to trend a lot more, have less reversals than, for example, something like gold, where it loves to create these reversals, giving you reversal type opportunities. So, yeah, this is gonna be a trade recap of just July 11th. Okay, so this session starting. Okay, let's first go on the 15-minute real quick for this. On the 15-minute, what I was seeing for structure was we had first off. Let me delete that real quick. We had a change of character here on the 15-minute. Okay, this is the last high that made a low. This is inducement to me. You could mark this potentially as a change character here, but this is a better change character in my opinion. So we made the low, and then this right here is all internal. Keep in mind, this right here is just internal structure to this external leg. So putting the pieces together, it would be something more like this. It's not the best drawing, but something like that, right? We broke out and made a change of character on the 15-minute. And once we had the change of character 15-minute with a body closure above on the 15-minute, as you can see, confirmed it. Um, I was looking for longs, so you can see right here, I even reviewed this day as well. Okay, this day previously relates to this day. So on this day, I took a stupid loss here. This is definitely something I journaled for sure. I remember journaling this trade. Again, this is why no matter how far into your journey you are, you still want to be journaling. Why? Because of these things, like these mistakes, you can never be perfect. Okay, I'm sure you will make a mistake at some point. Even if you're training for 10 years, you will still make mistakes. And this was just a technical mistake. This was not an emotional mistake. Nowadays, with my trading, I don't really have psychological mistakes anymore because I know my system very well, in and out, and I know that I'm profitable as long as am sticking to my system. Once I start deviating from my system and strategy, I start losing trades. So this was just a technical mistake here. I should have realized we were very low in the leg here in terms of structure, and that all this here was just inducement. Okay, I had this inducement marked out ahead of time too, but I wasn't too sure if we want to go lower or not. I was hoping to go target this week low because we were originally bearish. However, I failed to notice on the left hand side, we had a 30-minute strong demand. Therefore, we can expect some sort of market structure change, right? Externally, which is what happened. This is essentially like a high time frame reversal model that I show you guys like this. This is essentially what that was, right? We shifted structure. So this is an invalid loss to me. This is just a stupid mistake. Journaled it. Should not be. I will avoid taking this trade ever again. This is way too low in the leg. Um, I had this 15-minute POI marked here, but later realized this is also inducement here because regardless, even though we took out this high right here, it would have been a strong high. Technically, we still have a lot of imbalance, and we have a major origin above here. So based on how internally market is delivering in terms of how price is delivering here, it's very rare to get a short here. So I later found a buy sell here later on. That's a flip here. Took a loss there. I'll say this is more of a valid loss than the previous loss, but it still is not a great setup because it's a flip and not an origin, right? And so then took a loss there. This was actually a stupid thing too. I realized. I thought I saw a fair value gap here in OB, but actually there was none. So technically this is an invalid loss here. Yeah, I wasn't sure what was going on at the time, right? It looked very odd to me. So that was something that I made a mistake here on my end. So you can say these two losses should never have been losses. Okay. Anyway, journal them for the sake of improving things like that in the future. We had a 15-minute PY above here. Okay, above this change of character. Now, since we had a change of character here, this is a risky counter trade setup now. This is actually counter. This short here is counter trend to the new external bullish trend. So knowing that, I targeted some sort of supply or demand. Okay. And in this case, I targeted inducement because we know when price takes out inducement, we can likely get a change in structure. Okay. So I targeted inducement, got about 4 out of it. I could have targeted this origin here, origin, but to be safe, I wanted to secure profits for this day since I took 2 losses ahead of time. So after 4R, I am up 2R in profit for the day. I broke even here, by the way, not at this exact candle here because we didn't have a good body closure below. I broke even here. Okay. That was my trade management. Here, you guys know what exact setup I took. This is clearly an OB setup, entry model. Stop loss I put above the high. You could also put it above here too, but this is more risky. So I put it above there. And if, let's say, my target was very close, let's say my target somehow was here, then yes, I would have my stop loss down here because I'm not a 2R kind of guy. Majority of my data, majority of my trades will run 4R on average. So keep my data consistent, 4R trade there. Here we tapped into origin. This is a very strong origin. Why? Because you could say the origin is already down here, right? In this whole entire leg, but because we shift the structure bullish, we can expect price to continue in that direction. Don't forget, when price is trending, we will have smaller pullbacks, okay? Because it wants to trend. And in this leg, this is in the discounted range, below 50%. So below 50%, we had a origin, and why was this very good POI? We had inducement up here, taken out, okay? And we had this POI create an internal break structure, which is nice. Confluence. And the biggest thing was we took out inducement here. Okay, we had inducement here, and we took it out, making this a strong low. That I teach you guys in the course. Now this origin, to my view, should likely hold, and that's what happened. Okay, I entered here. I believe this was off inverse fair value gap entry model. I think no. This was an entry model off inverse fair value. I see it now. This was an entry model off an OB. It was this OB. Wait, no, this OB right here. You could have took it off this lower OB. You would have got a better risk reward, 6 instead of 3. Double risk reward actually, but I decided to take it off the higher one. I didn't want to miss this trade. That's basically it. This trade definitely could have targeted this high because knowing that this high is now weak since we shifted structure externally. This would be a weak high. This should have been our true TP, but I closed out early. Why? Because of time. That's the reason. This is another key thing I want you guys to write down. If you haven't, look at the time here. We are outside of my kill zone session. Right? Okay, we are outside the kill zone. So that's not ideal because price tends to not move as well outside of kill zone. But this is also like an asset specific thing. I know how oil moves, and oil moves very volatile up until 2 p.m. Okay, that's like the cutoff for volatility. So after 2 p.m., typically we don't get much volume in oil whatsoever. Like it's dead, right? It's dead. So that is why I didn't mind taking these trades outside my kill zone. And also my kill zones are not like a specific thing, right? I'm not only taking trades within this time frame. For the beginning opening, yes, I'm only taking trades after 8:30. But for the closure of the kill zone, if there's a lot of volume and a very good setup with high volatility still present, I will take trades. But typically, I like to cut myself off because from my data, This is why data collection is key. From my data, 90% of my trades in my setup occur within my kill zone, meaning after 11:30 a.m. EST, if I'm looking for a trade, only 10% of my setups will occur. So it's a lot lower odds of my setup occurring, and that means essentially it's not worth my time. Okay, it's basically not worth my time um, looking at the price, waiting for this time for a 10% chance of seeing a setup. Okay, that is why I try to avoid really trading after my kill zone because of data. That's why you guys need to collect data on time as well. Time is very important in trading. Let's trade here. I got very lucky here. I broke even here. You kind of broke even at here, but this was a wick closure, wick internal break structure. You can say, see, this is not valid. This is a very valid one. We had a body closure above, so that's my break even point. Okay, you can also use these left side as break even. It's up to you which side you want to use, whether you want to use the right side of current price action or the old structure on the left. For me, old structure on the left is a lot more probable for break even. Why? Because this left side, just right side structure is technically internal for this left side. So something you want to keep in mind. Took a 3-hour trade here. I got lucky here. Why? Because something happened here. There wasn't even news here. I don't know what happened here. Very strange, but something happened. So luckily my break even held here for this my trade. And you guys will see a random TP later. I got a little scared here, I'm not gonna lie. Because I was still actually looking at this trade. I teach you guys not to look at your trade when you enter after break even. But I was looking at this trade because I came back for a bit. I wasn't really looking at the trade during this time, but as soon as I came back for a bit, I saw this and I was like, whoa, what's going on here? But you guys can see based on what I teach you guys, this came back just to cause a mitigation here of a demand zone to push higher. So that is that trade. 3R right there. Definitely could have secured more at 5R, but it is all good. And then later, this now becomes high time frame inducement. This is why experience is so important in trading. The more experience you have, the more you're able to see these things ahead of time. This is not hindsight trading because I took these trades live, right? You would know these things ahead of time. This is ahead of time. This is inducement. So technically, you don't necessarily mark that as a break of structure. This is a break structure on low time frame, not on the higher time frame. In terms of high time frame structure, this is inducement here. So that I think that's why I left out that break of structure there. But we would have knew that was a weak high. So right here, what happens later on the next day, we had a 15-minute POI. You always start on the higher time frame. Okay, 15-minute POI, especially if there's a huge range. Also, just a huge range like this. But there, obviously, you want to be buying in discount. You want to be going on a higher time frame to look for higher time frame POIs first before you go to lower time frame POIs because there's usually tons of 1-minute POIs on a lower time frame, and you want to focus on the higher probability ones, which are higher time frame ones, right? And if you don't see any higher time frame POIs, or if they're too big, that's when you refine it to a lower time frame, smaller POI. Let's stay here. Okay. I found a trade here. I got in on the chart a bit late this day, I remember. So I missed out on the initial entry here. You would have had an entry here somewhere. I missed out on this initial entry here. Unfortunate, but adjusting to what current market price action is telling me, mark this internal change of character here. Okay, this is not a very strong internal change of character, but it will do because a 1-minute body closure at least. On a 5-minute, it would likely be a wick, but internal break structure here. Okay, but that's after I entered, right? After I saw this internal change of character, and I saw we already hit the 15-minute POI, we're likely to push up higher because externally on the higher time frame for 15-minute structure, we made a change of character here. Remember previously? So this is just inducement here. So what's going on here is we made a structure up, and this is just a pullback phase or mitigation phase for that new expansion. So this is things you have to need to learn how to identify and put together in real time. Definitely takes a lot more practice and experience, but once you get the hang of it, you will be a money printer. So this is a trade I took here. Let me just turn on my POI indicator. It's kind of annoying right now. I took this trade here off a inverse fair value gap model. Okay. Inverse fair value gap model. Stop loss could have been here, plus OB, but I didn't see much difference in my RR. I was just like, screw it, left it there. And then targeted this origin. Okay. You could have targeted this origin, could have targeted this origin. I would say these two are both origins, okay? Because they're literally at the origin. There's nothing else above here. This is all just external liquidity. Again, knowing price was bullish, I should have targeted here, right? But we want to be realistic with our TPs, and realistically, at this moment, I was seeing this. There was still another higher time frame POI down here, meaning we could still be in the mitigation phase or retracement phase back down here before we push up and create that external breaking structure. That is why I TP'd there. So if you guys want to understand the logic behind everything I trade, all my TP, stop loss placement, everything is logical. Okay, it all makes sense. This is what I teach in the course. That was my TP there, 3R, not bad trade. We had to change the character here. Not the strongest change the character here personally. Off this very small body closure. This would be when it was very valid. Took 2 losses here. Okay. I would say this loss is, you could say, valid, I guess, because I was still seeing this as a potential sweep, not necessarily a strong change of character. So I was taking it as an external liquidity POI setup, and I just unfortunately hit a loss. That's all that happened. That's because we didn't know if this was going to hold or if price is still going to come back down. Right. But now that we confirmed it, this trade, this next trade here, I just had a bad stop loss. Stop loss should have been up here, expecting that. I wasn't hoping for price to come back to this OB, but it did. So you could have actually had a better entry than me at this OB here and targeted the flip. You would have 7R instead of 3R, but it's all good. I had a stop loss here. I didn't mind it. You know, it's part of this plan. And then finally, I took a counter trade. This is why I tell you guys also so much in the course. Counter trend trades are a lot more low probability because it will take you a lot more tries in terms of trades before you get it actually right. Because realistically, we don't know when we're counter trading how far this will run. This could continue running, taking out this external, and then give you a potential small pullback for low R just to continue higher. That's why continuations are a lot better than reversals. But if you know how to trade reversals and manage your risk properly, you can still make more money from the market trading both reversals and continuations. Because you guys can see I took a 3R trade here, which canceled out both these 2 losses and I gained 1R. Okay, so this was actually a net profit for me taking this counter trade. This year was pro external, counter external, or pro external, counter internal. So definitely want to keep track of internal structure and external structure. This may seem confusing in the beginning, but more practice you have, the better you will get at it. And trust me, this is a flip here because this right here directly caused the internal break structure here. You could have marked this also as a flip. There was no confirmation here really for me. I wouldn't have taken impulse model entry here because, again, like I teach you guys, it's too big of a range. We would likely get a retracement. So I took this flip here. Okay, you could have refined it also to this flip here below, which is even better. And yeah, took my entry off a confirmation and TP'd at this. I put 4R, but this is technically 5R, 4.96, close enough to 5R here. I TP'd at the external 15-minute high because we had a change of character earlier on the 15-minute, and then we were expecting these highs to be weak. And the only reason why I was able to confidently hold my trade up to this external high was because I saw how strong this 15-minute POI held, meaning we're likely to, and also this change of character, we had body closures above, we're likely to already start the expansion phase of a continuation of the 15-minute market. So I took an OB entry here, got 5R out of it. Nice. You could have also targeted this. This would have been a very valid target here too as well for 4R. You could have also targeted this zone here, for example. This all inducement to me. So this could have been a valid target. This could have been a valid target. This also could have been a valid target. But for me, based on context, I decided to target for 5R total, right? Because you guys can see anticipation of price is key, because if you didn't know we were shifting to the expansion phase, you would have taken this short and you would have most likely hit a stop loss here or break even because there's confirmation, right? So that's why I like to not trail my stop loss as well. Had a 5R there, and that was it for these 2 days. So if we want to add these 2 trades up, we can say 3R, 6R, 3, 6, 5, 11, -2. So this total day, I don't think I have any more. I'll just make it right now. Why not? This total day, we had a 9R net total day. Okay. This day was 9R total. And then this day here was 4, 5, 6, 7, 6, 5. This was a 5R day. And this is not a 5R a day for me. This is just 5R on oil. I trade 3 other assets, so those are bigger than a 5R a day. But 5R a day for oil, 9R a day for oil. 2 days made about 14R just trading oil. And did not spend too much time either, right? Because I'm not actively looking at my trade once I manage it to break even. I'm just waiting for my setup and entries. So hopefully you guys did find this video very helpful in terms of learning from my trade recaps. I'll be posting a lot more of these in my training course that you guys have bought. So again, make sure to stay tuned in the course. I'll updating it all the time, very often, for you guys to check out and learn a lot from. So you guys can gain experience also, because me teaching you guys this will teach you guys how I read the market from my perspective, but it won't be enough. You need personal experience and screen time. And yeah, so one more thing to cover here. The reason why I made a break strategy here and not here is because if you made a break strategy here, you're expecting price to hold this high, which is not. Price, in fact, did not hold that high. This was all inducement. So once price takes out inducement, this is and creates a new low. This is a strong low, a strong high. My bad, strong high. This was a strong high, meaning if this strong high gets taken out, this is a true change of character with body closure. So that's why I marked a change of character there. For you guys that are wondering why I didn't mark a change of character here, because this price is still internal structure for this leg here, this entire leg here, right? So internal, external, flip around your time frames. If price is not clear, keep flipping until you get a clear picture of what price is doing. On the 15-minute, this looks very clear to me as inducement, internal inducement for this 15-minute OB right here, right? You see it right here, 15-minute OB. So anyway, hope you guys did enjoy this trade recap. Very long one, I would say. I'll try to make the other ones shorter. And yeah, I'll see you guys in the next one.